Why you should buy a house right now and not wait. That's the topic for today's episode. And without further ado, let's dive in. Hello everyone and welcome back to another episode at Novarise Invest. For those who are tuning in for the first time, this is your channel for financial education. So today it's going to be another video about the housing market and another video to reiterate why you should invest in real estate right now, why you should buy a house right now and not wait until tomorrow and not wait until another year and wait for the housing prices to fall because it doesn't seem like it's going to fall anytime soon. So without further ado, let's just dive in straight into the content that we have prepared for you. So for those who have been following me for quite some time, you will probably remember an episode that I released a couple of weeks ago where I talked about why you should invest in real estate now and not wait. And in that episode, I actually made a comparison like you see on the screen about how housing prices in the market will always go through a reset. But overall, the trend on the rentals, it's always upward, just like you will see here on the screen. Now, I know that some of you are brand new and probably are tuning into the channel for the first time. If that's the case, what I'm going to do is leave the link to the description down below to the episode that you see right now on the screen. So that way you recognize it when you see it. And that episode will give you all the details that you need to know. But in the meantime, stay with me in this episode so we can quickly go through the recap and then jump straight into the content. And for those who are actually planning on skipping ahead, I don't recommend you to do that because it is important that you keep this in mind so that way whatever I'm about to show you starts making sense. So we got the housing prices in Florida. Once again, they got reset, but look at the rental trend on the right. It's always upward. Same thing in California. The market does reset, but the rental prices are always going upward. Same thing in New York. We have a little bit of a setting here on the rental trend that you see on the right. And that was because of what happened with COVID last year. But I'm about to show you soon that that trend is actually heading back upwards. And in fact, it has actually gone up even more than the prices from last year before the pandemic started. And Texas, same thing. We do have market corrections, but at the same time, if you look at the right, the rental trend, it's always going to trend upwards. So it's important for you to keep this in mind. Now, what we're going to do is to go straight into the articles that I've actually selected for today's video because it's important that you see it for yourself, that I'm not just simply making this up. The data is actually out there and it's for you to see it. Okay. So now that we're here, we have this article from the Wall Street Journal that talks about millennials, right? So for some millennials, a starter home is hard to find. Why is that, right? So as you're scrolling down, you're going to look at here. So the shortage of available starter homes feels like yet another hurdle blocking some millennials' path to traditional money milestones. Why is that? So the first rung in the homeowner ladder has long been an affordable starter home. These houses with their smaller footprints and selling prices allow young homeowners to build wealth and upsize as they started their families, right? The supply of entry-level housing, which Freddie Mac defines as homes under 1,400 square feet, it's at a 5-decade low. Okay, so for the past 50 years, that means that the supply of entry-level housing has been at its lowest point, according to Freddie Mac. And for those who are brand new to real estate, who have never heard about Freddie Mac, I'm sure that at some point you have heard about mortgages that require less than a 20% down payment, FHA loans or loans that require you to do a 5% or 10% down. So typically those loans are backed by companies like Freddie Mac. So that's just to give you an idea of what the role is on the mortgage and the housing industry. And they do a lot more than that, but that's what they're typically known for. So as we're scrolling down, there just aren't enough of these homes to fulfill the demand, said Ed Pinto, director of the AEI Housing Center at the American Enterprise Institute. It's creating this great American land rush, as I call it. People are moving around and there's tremendous demand, but the inventory is down, okay? That's what's driving the prices up. And the longer you wait, the higher the prices are going to become. As of 2020, the median age of a first-time homebuyer was 33 years old, up from 30 years old a decade ago, according to the National Association of Realtors. Why is this important, you might be wondering? Well, that means that there's a 3-year gap, okay? There's a 3-year gap before this family of 30-year versus 33-year-old can even think about affording a house because they're getting outbid by people with more money. So now that means there's a larger audience that you can cater to. So about a decade ago, you will see a higher demand in rentals for people up to 30 years old. But now the pool has increased to include people that are up to 33 years old. So you have now 3 years worth of rental income that you could be getting yourself by just simply investing in real estate and providing housing to these families who are not able to get access to housing, as you see in this article. This is a big deal according to the chief economy and head of Freddie Mac's Economic and Housing Research Division. We need to think about how we talk about affordable housing because for most people, when they hear affordable housing, there is a instant negative reaction. They think low income, right? The issue now is that these features have not just invaded the middle class. It's not going up into the upper middle income strata, okay? And that's why you need to be able to provide a solution because you as the real estate investor are here to be able to provide housing to these families right here. Lately, data from the National Association of Home Builders showed new construction is again given priority to higher square footage for single-family homes, meaning anything above 1,400, I guess, a trend likely spurred by the widespread shift to working from home and house hunters' need for more space. Remember, there is lots and lots of migration going on. So for people who are fortunate enough to still work from home, they are demanding larger houses. And that's where all the home builders are concentrating their efforts in providing larger houses. So that means that if their attention is focused on building larger homes, they're not going to have their attention focused on the smaller homes, which translate to less and less supply of smaller homes that also translate to more people needing to rent properties because there's not enough supplies of smaller homes in the market. And if there is, they come at a higher premium, which doesn't necessarily equate to affordability for some families. And here's what I want you to focus your attention on because this is key to our next article. As the summer selling season winds down, some house hunters feel they might soon have to find a rental that can bridge the gap or simply save their energy so that they can resume looking when prices cool off. When is that going to be? We don't know. It could take a year, it could be 2, it could be 3. Remember, even if the builders are starting to build their homes, they're not concentrating on the smaller homes. They're concentrating on the larger ones. This is where you come in and provide housing for these families who will eventually wind up renting from you or from any other investor out there. So with this, I want to do a segue and jump into this one article right here, also from the Wall Street Journal. Apartment rents increase as young workers head back to cities. Landlord stocks are up big this year as rental market exceeds expectations in places like Atlanta. So apartment rents and home prices have been rising in cities like Atlanta over the past years. So once again, it is no surprise, apartment rents are rising fast, boosted by young professionals. Okay, I want to focus on the young professional part because that's what this article is about, right? It talks about millennials, and here we're talking about young professionals, right? So once again, apartment rents are rising fast, boosted by young professionals returning to cities and an expensive housing market that keeps many of them renting. Okay, so for those who are actually afraid that if they buy a house, they might not be able to rent it because there's no demand or because of the whole forbearance, this article is going to help you get rid of all those fears, okay? This article actually addresses everything you need to know and reassures you that you do not need to be afraid that now is the right time for you to buy because there is a lot of demand for housing. So back to this article. Stock prices of publicly traded apartment companies have jumped in stride. The food scenery equity apartments index, which tracked these landlords, is up 42% since January, trouncing the S&P 500's 17 gain during the same period. So for those who want to know more about the FTSE Array, here's an article right here that you can actually check out, which I'll make sure I'll leave it in the description box down below for you to read. There's multiple ways to invest in real estate. One is by investing in real estate through the stock market, and the other one is just by simply buying properties and making them available for renters. Okay, so as we scroll down, median rents has risen more than 10% over the past year, $1,244, according to home search website Apartment List. That figure is also 9.4% above the rent stood in March 2020, right before COVID lockdown began. So this is key, and this is really important for you to pay attention, okay? So March 2020 was the month where, the country came to a stop, right? It's just like, oh my God, what's happening? COVID is here. Stay in your homes, wear your mask, yada, yada. I'm sure you remember. There's no need for me to make you relive that. And what this paragraph it's talking about is that at this point today, August 3rd, right? 2021, at this point in time, the median rent has risen 9.4% above where the prices were back in March 2020. That's huge. That's a big demand right there. There's a big jump right there, okay? One big factor behind the recent increase, soaring housing prices are forcing many will-be home buyers out of the for sale market, and they have had little choice but to pay up for rent. As of June, median existing home sales prices are up 23.4% from a year earlier to $363,300, which is a record high, according to the National Association of Realtors. Job losses at the beginning of the pandemic initially hurt rent collections. Occupancy rates dropped to new lows for some landlords. Major markets like New York and San Francisco had double-digit declines in asking rent, sending apartment stock prices tumbling. That is in fact true. I invest in New York as well, and I have to make some concessions in my rentals, but the good news is, hey, I was able to rent them out. I was able to continue to pay for my mortgages, and now rent prices are back up again, okay? Isn't that amazing? Now, but in nearly every major metro area, rents are now much higher. Once again, just to reiterate my point, rents are now much higher than they were a year ago. New York and San Francisco rents have begun to recover without having to lure tenants with free rent or other incentives so often anymore. Most market rate renters have remained employed during the pandemic and continue making their monthly payments. Very important. And as we scroll down here, I wanted to share this graph right here. So that's the FTSE Array, the index I was just telling you about, and this is the S&P 500. And if you look at this graph right here, you will see that the performance, it just basically outperformed the S&P 500. So in other words, this is kind of a good time to be an urban apartment owner again, said Mark Parrell, Chief Executive of Equity Residential, a real estate investment trust, a REIT, for some. Mr. Perel said his company is winding down concessions and deal sweeteners across his portfolio, which is mostly centered on large coastal cities. Last month, equity expanded into 2 markets. It left about a decade ago, buying rental buildings in Atlanta and Austin, Texas, markets where rent had been steadily rising and for sale homes have increasingly out of reach for even high-paid locals. Atlanta home prices have risen more than 25% in the past year, pushing more people to rent for longer periods. That's good for our company, Mr. Perel said. But if you're still a little bit skeptical and scared, well, say no more because there's more to this article. New household information is also driving demand for rental apartments. Analysts said you've had young professionals who were living with their parents being called back to their employers or who feel more secure and now they're going to rent. So remember, the pandemic hit, a lot of people either had to downsize or a lot of them had to move back with their parents. Now they're moving back out because, hey, your employer, your boss wants you back in the office. So what are you going to do, right? You're going to either quit or just look for another job that allows you to work from home. But in this scenario, most of them are choosing to go back to work. And with that comes more demand for rentals. Okay. So apartment owner UDR Inc. noted in a June investor presentation that tenants age 25 to 29 and now 30 to 34 now comprise a larger share of their client base than they did before the pandemic. The company hit an all-time high occupancy rate of 97.5, achieved, as executive said during the July earnings call. And as well, Camden Property Trust, a Houston-based landlord, reported new lease rents and its property jumped 19% this July. So there you go, all that information that you needed to know. And as you can see, there's no time like today, and you shouldn't leave for tomorrow what you can do today. So go ahead and invest in real estate. And if you're looking for ways to invest in real estate the right way, run the numbers so that way it becomes a profitable investment for you, how to do the market search, how to make sure that there will be demand in a certain market. Here, it's a link where you can actually access a free webinar that you can sign up for and learn how to invest in real estate the right way. Okay, so I'm gonna leave the link down here, and don't forget to check it out. I'll see you at the webinar. Take care. Bye-bye.